What's happening, everybody? Ian Walsh, Hard Money Bankers here, joined with my partner, Ryan Walsh.
Yep.
What's up? So, for the next few days, potentially weeks, potentially years, we're going to be doing this show because we're tracking something really important that I don't really know why the markets haven't shown up yet, but well, they're kind of showing up, but the world doesn't know yet. There's like this big secret right now, right, that we have in the world that nobody kind of knows about, or at least not. It's not on everybody's radar, which is insane to me. But so you want to tell them what the news is, right? You want to tell the world what news we're tracking and why this is so important?
Sure. I think why it's not overly big yet is because it's happening over in China. So maybe some people, if you're watching this, you're probably in real estate. You might have heard about this. The company, the Evergrande company, we don't know exactly what's going to happen yet on Thursday, but the rumors are that they have to cover either 90 billion, 350 billion, or 1.5 trillion.
Yeah.
So it's unknown exactly what those numbers are, but it sounds like Thursday the world finds out one way or the other because the notes are being called due. So that is the big news, and it may not be apparent as to why that's big news, but I'll hand it back to you, Ian. Why is that big news?
So I've been doing this for. I was in here for the last crash, and when I look back and go, okay, what happened? I always pay attention to like what was going on, what was the writing on the wall, what could we smell that smelled differently? Like, why could we have seen this? And I've always been very sensitive to it, especially as a lender, because we're in the business of investing, which is hedging risk. It's not really making money. It's hedging against risk. And I know that I've been pretty vocal at times about like charts showing different movement. Now, put a few things in perspective here. When we had the trade wars a few years ago, I saw it in the charts and I was getting vocal then. Then we had COVID showing up and I started to get vocal then. I was talking about, 18,000 mark and stuff like that. Well, this is the third time now that I've been vocal, but now I'm super vocal about what's happening. And it's like, it's interesting at this moment, this exact moment is like, you can't really smell it unless you're looking for something to smell, right? So I started thinking about and looking at the charts. I've been realizing, man, we've been overcooked for a while. There's different things on the fundamental and technical perspective that are really important as to what's happening right now. And honestly, like, the fundamental stuff that adds up, in my opinion, are things like, okay, look around. Everybody's making money in the middle class. Everybody quit their job, became a realtor, and makes 300 grand right now, right? Everybody's driving a Mercedes and a Beamer. Everybody's is living out of their shoes. Money is so cheap. It's liquid everywhere. It's bound to pop. But the question is where. I mean, it was the same thing in 2008. I remember like thinking it was normal that all of these 17 and 18-year-old guys that I went to high school with were driving like BMWs and stuff. And I'm like, oh, that's just because we live in an affluent area. But that's not the case. We were in a top. People were living out of their way further than they could in terms of stretching. And we're seeing that now. And we've been in that. And we've been blind otherwise to think otherwise. So as we sit here and watch the markets, I've been waiting for like what event. It's always a catalyst that lines up to an event to drive everything. And that event is occurring. And the news kind of started, I guess it's been around a little bit, but the news itself is Evergrande, which is the largest home builder in all of China. There's been extreme pressure and bankruptcy calls and that kind of stuff that's going on. We don't know exactly how far and how bad it is, except for the fact that usually it's a lot worse than whatever you're probably hearing now. So like you said, right, it could be 90 billion. Do they owe 300 billion? We've heard numbers as high as 1.5 trillion. It's all over the place. And that's going to stem into massive amounts of other companies getting ruined as well. Like it doesn't stop with one company. So
yeah, I think that's the key point, that it's not necessarily Evergrande itself that is going to shake things up here. I mean, it will. You'll feel it in the market. We're feeling it right now, right? But it's not this one company that's going to cause it all to happen. And this goes back to kind of what you're saying back in 2008, where the first bank that came out that said, hey, we're in a lot of trouble here. It caused everybody to pause and say, hey, what's going on? But it didn't cause the panic yet. It's what happened next is what really caused things to move. And I think that's what you're about to dive into, which is your domino effect. So where do you think it's going to go from there?
Yeah, so it's likely not the single sense that Evergrande is the only reason this occurs, right? Like it's going to be more than just that. It's going to be because they're tied in. Like we have a world market now, right? We've had a world market, but they're so tied in to all these other suppliers, nationally, internationally, all that kind of stuff, that it's just like when you throw a pebble in a pond and the ripple effect goes out. It just starts, that wave just starts catching everything. And the question is, how far does it go? Well, I don't know. And that kind of takes me over to the charts, which, so I follow obviously our real estate market and our stock market. And I've learned over the years how to read things in the market based on the price movement, because price is really what dictates, where the players are. So I kind of started to make these videos about a week ago, and just something didn't smell right. And, on one of my videos, I said, we have 1,000 point, I think it was like Friday. I was like, look, if we have 1,000 point day from right here, it was Friday. I said, if we have 1,000 point day from right here, I'm nervous. And then bang, yesterday's 1,000 point day, meaning the market moved 1,000 points. So I'm like, holy cow, like this is the real deal.
Yeah, and, those are Bitcoin numbers, right? Like the fluctuation, 1,000 points on the Dow is
it's not quite Bitcoin, because Bitcoin lost 10% yesterday, like 10%.
That's a casual.
Yeah, that would have been 3,000 points in the Dow, which technically it's not that crazy, I guess. But in the Dow, you'd actually see a limit down. So the next thing that we're about to see is probably going to be limit down days, meaning they lock the stock market to stop panic and fear, which they did during the COVID. It's supposed to prevent, catastrophic sell-offs. But what I think is occurring, and I've kind of been posting these charts as to like follow this along. So yesterday I said, holy cow, we're opening with a huge gap down. And if you look at this chart on this bar, this is yesterday's bar right here. And this was the gap down, the 1,000 point day. Now this is real-time hours. This is not the 24-hour market. If I put the 24-hour market up, it'd be even bigger. But this is just the United States market from 9:30 a.m. to 4 p.m. And when you look at this this bar, this gap, this move right here caught all these people in this trend line off guard. So they're all covering their shorts. What that means is that, they're covering their positions. They got stopped out. They're liquidating their positions. They're calling uncle. They're done. So when you're in this gap down, that's a huge fear thing in the marketplace. That's something to symbolize position changing and stuff like that. Everybody knows the Evergrande news is coming. Tomorrow is FOMC minutes, which is, are we having inflation? Where are we? So you're going to get a double down here.
So what's the FOMC minutes?
FOMC is the Fed talks. So the Fed typically has about eight meetings a year, and then they're going to talk about inflation adjustments or percentage adjustments in money. So that's, the market usually moves pretty fast on those days, because if we go, hey, we're raising the interest rates, a point or something, that would really move the market. But so you're going to have a double down scenario here. So you're going to have FOMC tomorrow, and then the fear of Thursday's announcement on Evergrande saying, hey, are we belly up? And if they go belly up on Thursday, which is what a lot of people are concerned with, that just leads into panic selling Friday, and then tension building through Monday, through the weekend. And then just, you're going to get lockdown, limit down days next week based on that. Like I would call a Black Monday part due on that scenario from 1987 on this coming Monday, but they have limit down days now, so they'll lock the market up. But what you'll see are multiple limit down days, probably some limit up days as well, because they're going to try to rally as you get crazy in here. But when you get this craziness at the top, the bigger concern than this chart that I have here, than even a Friday and bloody Monday bloodbath, is this right here, this 32,000 mark that I have right here. You see this number, 32 grand, 32 to 32,400. There's a trend line that's off of COVID, meaning anybody that bought off of COVID, the biggest money in the world that bought off of COVID, they have positions based on this trend line right here. Like this is the biggest trend line off of COVID. So, and the movement of COVID was trillions of dollars. So if we crack this 32,000 line with force, you're looking at a scenario where I don't know what's underneath of it. I drew some support and resistance lines that came up that you could maybe find some bounces in these areas below the 32,000 line, but I'm not convinced that this isn't the real crash if we go through this 32,000 line with force. And we're not looking like we're going to approach it with any kind of gentle, approach. Like this looks like a full on attack at that level. So I wish I had like hundreds of thousands of viewers, because then the people would know what's going on. But like, we're going to look back and be like, there's like 10 of us that knew and that's it. So,
all right. Well, for the 10 of us, what's your advice right now? Are you saying, why don't you hold off for a week or what, particularly in real estate?
I don't know. I don't know about real estate. I mean, if I were to be so the question is the certainty about the call, right? So if I was 100% knowing what I know, what I'm saying right now, right, that means I would not do a single other loan until this is done. And I would put all my money to short the market right here, right? That's 100%. So there's always a shadow.
You probably need an inside source to have that 100%.
Yeah. So what I would do at this moment is probably, if I was in a position where I was like selling a house and I was like pushing off closing or something, like I would sell your house today or tomorrow if you could, if like you're in that position. Or if you're in a scenario where you're like, maybe should I buy more stock today? I'd probably, unless you know what you're doing, like you're going to see all these GME, Robinhood traders that got in since COVID. They're about to learn what a big boy market looks like. Because it's not going up anymore. It's not doing that thing that kept saving everybody's butts. I think tomorrow's chart's going to be called "Hold On to Your Butts," and actually that'll be Thursdays. Thursdays will be "Hold On to Your Butts." That's a good title.
Hold on
hold on to your butts.
Do you know what time? Like, is that getting announced Thursday in China?
Yeah, see, that's what I would think. I would think it's going to be
so overnight kind of thing. We might know, going into the day.
Yeah, we should actually look up when the when they're doing, they have to declare it. It's got to be the Asian market, so it's got to be overnight. And maybe I'll just leave like an open chart running on Facebook Live, just watch what happens, because it could be nuts. Because you don't even have, I mean, the gap down you could have, like, could you imagine? I'll just throw out like something to like imagine at this moment. Like, could you imagine if so let's say we charge tomorrow down to the 32,000 line or anywhere near that area. I mean, we might even get there today. What are we trading at now, right? Do you have
No, I just closed it.
I don't have it in front of me at the moment. I mean, we were already starting to move down again, but I think 33,650 is probably about, maybe there, or 33,200 could be the bottom, one of those.
Are you easily able to get the 6-month chart up right now or no?
Me?
Yeah, like can you share the 6 month, or I don't want to.
Let me see. Carry the stream for a minute. Let me see.
Yeah, I mean the reason I'm asking if we can get a 6 month is I just want to show how quickly 6 month worth of work, right? Like how much like grinding the market has to do for 6 months, and basically how 6 months of going up can be wiped out in a week.
Well, if this chart that I have up is 9 months.
Oh, okay. Sorry, I didn't realize that was a 9 month time.
Yeah, so this is 9 months. This is 9 months here, and let's see. If you take it off the top, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we have 11 days since like the top, essentially.
Mm-hmm.
And if we go to 32,000 by the end of the week, that is 6 months. Yeah, it's 6 months. So,
okay, there you go.
In 2 weeks, we cover 6 months.
Yeah. Not bad. I mean,
no.
if you're a bear, I mean, not
what
bad.
I'm trying to bring up too is the trying to get this is not a great chart, but I want to use it.
Yeah, I mean, I would definitely say that, what we're cautioning here is keep your eyes glued to news right now. Because it could heavily impact, like, we're basically saying, hey, there's a potential chance we're at that 2008 mark that everyone's been humming about since COVID. This Evergrande news is large enough for it to be the catalyst. Now, I personally think if Evergrande is the only company that comes out over the next few months, that we will be okay. That's totally personal. But like you said, watch out for the next company and watch the money move right now. Because if the money moves heavy as much as you're saying, that means people know that there's more companies about to come out.
That's what's going on right now. Like people are like, well, why don't we hear about this or whatever? It's because all of the big companies right now, they know what's going on behind the scenes. Like the people the information that you don't have, I don't have. There's big companies with big money that have it. And that's what we're seeing in the market. These are huge positions moving. This isn't like me and you and like our retirement fund. These are enormous positions moving across markets right now. And well, that'll, put you in these kind of scenarios. Let me see, this is 2020 is insane on the charts. All right. So I have a chart that I want to bring up that is such a crappy I should have been more prepared. But I have like a chart back to 1975 here. So let me work with that.
We could always use it for tomorrow's show if you need more time to prep it.
Nah, well, maybe this will be like a teaser. Let me see if I can open this real quick. Gosh, I mean, the ultimate mark is COVID. Like as I'm looking at this chart, like it's the biggest thing easily that stands out. So if that's the biggest thing that stands out, okay. So this is a chart.
It's hard to say. Are you able to zoom in?
Not really.
We can kind of see enough, maybe to get the point across. I mean, I see.
All right. Let me see if I can. No, not really. All right. So let me do this. I can annotate this. You see this?
Yeah.
Okay. So this chart right here is from 1975. Okay, so that puts it in perspective. That's 1975 all the way back here to current. That mark, those two bars, that's COVID. So, like, look how small everything else is, including, I bet that's 2008. Let me see.
So up until 1975, that's COVID.
Yeah, and okay. 2008 and 2009. So 2008 was right here.
Yeah, and the huge difference between the two is the time. Because if you were to make that a single bar, what you just highlighted, it would be about the size of COVID, right? But the time that it took to do that was way different.
So
and what
the only thing I can is
we may be at the top.
This could be it.
This could be it. Yeah.
Yeah, I'm looking for a trend line. I'm looking for anything. This is about the only thing I could draw off that right now. Off of the 2008 line, because everything pre-2008 just doesn't even matter. Like there's nothing there significant, right? So this is about it. So 20,000. So if you see that, it's probably hard to see, but this is about 20,000 right here.
Yeah.
And honestly, like what this looks like is if we crushed 32,000. That 18,000 COVID low becomes really real again. And like I said, under that, I don't know. Like look at you can see the chart yourself. Everything before 2008 kind of starts a trend line, but we're in no man's territory. I'm shorting tomorrow. So that's what's happening. You heard it here on Facebook. I'm shorting tomorrow.
So we'll know. We'll know quickly if Ian's having a good day or bad day tomorrow.
yeah. I don't even care. This doesn't even. I don't know. This is not a chart that. This is it just doesn't make sense.
Yeah.
I mean, it makes sense. It makes plenty of sense. It's over. So I think though at this point that just bring up a chart, watch it. Don't if you don't know what you're doing in the market, now is not the time to buy, sell, or do anything silly or open up that account. I don't think there's any. I don't want to say there's no reason to panic. I mean, there is reason to panic. I'm not trying to incite panic. I'm just saying that there's real reason to be really concerned at this moment for the market in front of us. So I don't know. Anything else on your end, Ryan? Just maybe show up at the same time tomorrow. See where we are. I don't think there's going to be. I think we'll get movement tomorrow due to the Fed, but Thursday is
I mean, Yeah, let's do a show leading up till Thursday. Let's find out when the official announcement's going to be made by Evergrande and see what the market's doing, and keep people updated, appraised to what we're looking at.
Yeah, and I'll make another chart for tomorrow after to see about today. Last I left about 20 minutes ago or a half hour ago, whatever, was the market was heading down. Of course, question is, do we take out yesterday's low? Like, we made the move that I was anticipating, which was you see the short covering gap fill that I put there. I was expecting the gap to fill today, and everybody's gonna be like, oh, okay, that wasn't that bad, and I was gonna do the video saying, look, that was not a rally, that was just a short covering. And that's a big difference because it means it still wants to go down. And it did try to rally this morning. It made a valid effort, about 200-point rally, and then it just said, screw it, and we're out of here. So if you can't even rally enough to cover that gap, like, oh boy. I was pretty surprised that we didn't even have enough muscle to cover that gap. I know it's jargon, but like, you should have the ability to cover that gap after yesterday or come close to it. So unless today rallies,
if it's a real rally, is what you're saying.
Not even. Like, I thought at least like the people licking their wounds were going to be able to cover it. I don't think it's a real rally. I don't think there is a real rally here. I just thought that like there was enough of the market. I didn't realize, like, if it's really, really bad, they can't even cover that gap. They couldn't cover the gap. The only thing I could say is maybe they rally at the end of the day to cover that gap. Like, covering that gap is pretty important to see if there's like any hope left in this not going down to 32,000 and Evergrande. I mean, let's put it this way. Like, the headline was they were demanding that their employees give them loans. Like, their company was demanding the employees give them loans.
Well, yeah, they gave them the option that they either
you lose your job or you give us money.
And then they lose your pension or give us a loan. Yeah,
exactly. Like, oh my gosh. So I don't know why I'm smiling. This is F City. This is going to be.
Well, we can smile now because it's all unknown. Like,
yeah.
It may be different, honestly.
Watch how many people are watching this show on Monday. I'm not kidding. I always know, like, when the market's scared, everybody tunes into what I have to say. And when the market's not scared, they're like,
nobody's looking.
There's Ian just rambling. Yeah.
Right.
So,
all right.
All right. We'll see what happens.
Cool. Sounds good.
All right. Later.